The yen fell to a 40-year low against the dollar in Asia on Tuesday, putting traders on high alert for potential currency intervention by the government. USD JPY has gone to an astronomical level, to highs we have never seen, and now this is no joke. And this isn't something that we are trying to predict to happen. This is something that has happened and is likely to happen this week more than ever. Kevin Warsh of the Federal Reserve is speaking tomorrow, and he is going to give an idea on if he's dovish or hawkish, if rates are going to be held, if they're going to be cut, if they're going to be hiked. And this all ties into a major effect that can happen on GameStop and AMC, and we are around the corner of a possible short squeeze. I am trying to prep my entire family and my subscriber base for this. So without further ado, I'm going to reiterate briefly the carry trade, what it means, what is about to happen, and how what the Fed does tomorrow and Thursday is going to affect it, along with what happened with GameStop's chart back when we saw something similar and what is set to likely come. First of all, this is the DXY. This is the US dollar index. I want you to pay very close attention to what it has been doing recently. Now, institutional short positions in stocks like GameStop and AMC can be hidden using total return swaps funded by the Japanese carry trade. So, in plain English, instead of borrowing and shorting the stock directly, so going short AMC or GameStop, a hedge fund will use a prime broker to synthetically replicate the short position utilizing massive leverage. So how does that work? Basically, the hedge fund borrows money in Japan because the Bank of Japan keeps interest rates ultra low. Now I'm going to pause right there. Recently, Bank of Japan just hiked their rates. However, they are still very low. But they have given a further outlook of a hawkish stance and continued rate hikes in the future. Keep that in mind. Now, the fund will then convert these borrowed Japanese yen or JPY into US dollars, and then the fund deposits those dollars within a prime broker to fund and collateralize the total return swap. So here's how it creates basically a synthetic quote-unquote short. The hedge fund will enter a private derivative contract or total return swap at the prime broker, and if the target stock price, aka GameStop or AMC, goes down, the prime broker basically pays the hedge fund the profit. If the stock goes up, the hedge fund must pay the broker the difference. So the broker has to hedge. Now, to manage their own financial risk, the prime broker goes out into the open market and establishes a structural short position on the underlying physical stock. This is where it gets important. I'm going to pause right there. Why is this important? Because the prime broker is not running the trade. The prime broker is controlling the trade, but they're not the ones that initiated the trade. They're not the ones that own the trade. They are just running the mechanics of the trade. Now, this is so important because what ties in now is collateral, margin calls, things like that. The prime broker is not owning the trade. They are just controlling the trade. Now, the fragility of the metrics, the stability of this multi-layered trade depends entirely on two variables tracked by the carry to risk ratio. So number one, the interest rate spread. The difference between high US interest rates and low Japanese interest rates is the profit margin. Number two, the currency volatility. How stable the USD JPY exchange rate is. As long as the spread stays wide and volatility stays low, the short position remains cheap to maintain. Now, I'll reiterate that. As long as the spread stays wide and the volatility stays low, the short position remains cheap to maintain. I don't think those are going to happen. I don't think the short will be cheap to maintain. I don't think volatility will stay low. Okay? And you can see why. Now, when I say you can see why, there's an economic trigger there. The entire arrangement begins to break when the macroeconomic environment reverses, squeezing the trade from both sides. The Fed cuts rates, the Federal Reserve lowers interest rates, shrinking the yield spread, which is exactly why we have Kevin Warsh's stance tomorrow, and then the jobs report that are going to give us an even bigger picture, and the Bank of Japan hiking rates. If you have both of these simultaneously happening, the Bank of Japan aggressively lifting rates, making the original yen loan more expensive, the currency flips. Capital flees to the US, rushes back flees the US and rushes back to Japan, the USD JPY exchange rate undergoes a rapid volatile drop downward towards psychological breaking points. And if I bring you back into the chart, this exact timeline of this was April 29th of 2024 when Japan intervened. When we hit 160 on USD JPY, we flash crashed right down to 152. What happened here wasn't that things got way too high, right? Because we're higher now. What happened here was one, intervention, and two, volatility. Look how fast we dropped. This is important, okay? This is important. The gradual drawdown is a little bit different than an intervention and a flash crash lower, hurting these trades, hurting the mechanics of the trade because of the volatility, right? Because of the expense, because of the collateral that needs to be held. All of these things. That exact same time is when GameStop decided to fly off the charts. Roaring Kitty decided to come back, give us that thumbnail, right? All of this. Now, here is how the involuntary liquidation begins. The sudden spike in yen volatility and shrinking interest margins causes the hedge fund's carry to risk ratio to plummet. Because the fund's assets are in US dollars and their bets are in JPY, the sharp currency shift dramatically erodes their collateral. The prime broker then issues an immediate margin call. Now, if the hedge fund cannot post cash instantly, the prime broker terminates the swap, and to protect its own balance sheet, the broker must aggressively buy back physical shares of the stock on the open market to close out its hedge. This price incentive buying triggers the short squeeze. Now, I have a full post as to the scenario that we're in. So this is how it works. However, this is my separate post basically creating the theory. So again, if hedge funds are short GameStop and AMC via TRSs funded by the carry trade, this trick only works if US rates stay high and Japan's rates stay low. So simultaneously. And right now, the USD JPY remains elevated. This is what you need to see for these trades to undergo. However, the macro environment is a ticking time bomb for this leverage, and the ticking time bomb is getting closer and closer and closer to blowing up. So, for example, tomorrow's a big catalyst. Kevin Warsh is going to speak. Market is going to try and guess his rate cut stance. And if you have been living under a rock, you may have not noticed that the first time we heard Warsh speak, it was very interesting, but kind of bullish, right? We're in a tough scenario where rate hikes are looking less and less likely, holds are looking somewhat likely, and cuts are looking a bit more likely in the future. Now, if this happens alongside Bank of Japan coming in, intervening, hiking rates, this is the exact scenario where we get that short squeeze. Now, if his hawkish tones turns out to just be talk and he signals coming cuts, the US dollar loses its edge. Add the upcoming jobs report to the mix, which is Thursday. If the job data comes in weak, it proves the US economy is slowing down, which forces the Fed to cut rates faster, which will absolutely dump US dollar, right? Watch DXY over the next couple of days. If we begin to retrace sub 100, you're going to be a little late to AMC and GameStop party, right? At the exact same time, Japan has been recently done playing around. They are already planning on more direct currency interventions and is openly talking about hiking interest rates even higher to save the yen, right? If the Fed cuts and Japan hikes, the interest gap snaps shut. Capital will panic and rush back to Japan, slamming USD JPY rate down towards 140. Then suddenly, volatility again will break the risk models that the hedge funds use, and we will see that same algorithmic break in GameStop. Now, coincidentally enough, if you've been watching my videos, what have we been tracking? We have been tracking this same exact setup. In fact, I don't even know why we're on this sort of chart. I have a more perfect setup. That's maybe this chart, right? Same timeline, 182 days or so, give or take. My cat's running across the mic. And you can see right here, boom, boom, same setup, same scenario. What are we looking at? Well, we're looking at a point of interest where GameStop is climbing higher out of this cycle right around the time Bank of Japan intervened back here as well, right at that beginning of May. end of April of 2024, right? 2 years later, and we're seeing the same exact playbook unravel. Now, because the hedge funds owe yen but hold USD collateral, a dropping dollar triggers instant margin calls from the banks holding the swaps. If the funds can't pay up, the banks will lock them out. And to save themselves, the bank have to unwind the swaps immediately. And they do this by going in the open market and aggressively buying back the actual GameStop and AMC shares to close the hedge. Now, what's so important about this is when they go back and they close these, what about other short sellers who are directly shorting the stock? What about the reported 15% short interest on GameStop and the reported whatever it is, 20% short interest on AMC, right? Right, whatever. And that's just what's reported. What about them? They go underwater as well. Now, to close this video, yes, I'm in call options. Yes, I'm in shares in anticipation of the carry trade implosion 2.0. I would appreciate a like and a follow. If you guys are not following me yet, I don't know what you're doing. Make sure to join my Discord server below. That is what I got for you for today's video. I'm very, very excited going forward. I love you all. God bless. Lottery Stocks out. If you want access to everything I personally use each day, check out my Discord server below. In there, I post pre-market setups before the market opens, alongside posting my trades as soon as I take them, and that includes long-term investments as well. In the server, you will also find AI-powered alerts like market news, trade ideas, insider trades, dark pool trades, option sweeps, high success trade flow, and more. You also get access to your own personal slash commands every single week, my very own short squeeze channel, crypto talk channel, and more. If you guys want all of these tools and are ready to level up your trading journey, come join the other hundreds of members who are currently creating generational wealth for themselves. And if you're wondering what indicator I use to find most of my setups throughout the day, it is my very own custom pattern detection indicator. My indicator automatically identifies chart patterns and helps me spot potential breakouts much faster, alongside giving me a target for the specific breakout. This indicator is nothing like you've ever seen before. I will leave a link down below. Go check it out.